Welcome to DeFi Drip, the series where we talk about all things coffee and changing the world of finance. My name is Cassidy, and today we're joined by Prashant Kher, a senior director in EY Parthenon's financial services strategy practice and leader of EY strategy and transactions Web3 and digital assets offering. Today we dove into EY's report on tokenization and asset management and what that can mean for the evolution of traditional financial firms. Welcome, everyone, and thanks for joining DeFi Drip. And welcome again, Prashant. Nice to have you. So first things first, how do you take your coffee?
Nice to meet you, Cassidy, and thanks for inviting me to be here today. So I typically have my coffee. I like an espresso shot or an espresso shot in the morning, and usually I drink black iced coffee. But sometimes if I go to a restaurant or I go to a cafe and they don't have a cold press or a cold brew, I usually say just take black coffee, put ice together, and we'll make iced coffee that way. So I usually like black iced coffee. Occasionally I'll get something fancy with the the lattes or frappuccinos or something like that, but let's say 9 times out of 10 I go with black iced coffee or black coffee.
Nice. I'm also a black coffee drinker myself. I've got a cup right here. Oh, nice. Yeah, great to
Nice,
see
yeah,
that. So let's dive into it then.
absolutely,
Love to hear a little bit more about your background and what brought you to EY Parthenon.
absolutely. So I've been in financial services basically my whole career. So I started my career at JP Morgan Asset Management. I was on the institutional side there within fixed income, and doing some business operation type work there. I was there for about 5 years, moved on then to another consulting firm in their strategy group as well. And then I moved over into EY Parthenon in their financial services strategy group as they were building out a new strategy practice and capability focused on financial services. So been in financial services my whole life and been in strategy consulting, management consulting for a good portion of it.
So what type of research do you focus on at EY Parthenon now?
So what we try and focus on at EY Parthenon and EY broadly within financial services is really a lot of the cutting edge and different innovative topics that are challenging our clients, whether when within financial services, we cover asset managers, banks, wealth managers, insurers, private equity, payment companies, et cetera, et cetera. So in the past year, a lot of the really hot topics and really innovative topics that have been pressing to our clients are things like Web3, ESG, embedded finance, generative AI, digital assets, fintech overall, M&A and M&A strategy. So we'll do a lot of market research, whether it's interviews, surveys, roundtables with clients to understand, what are some of the things they're seeing, what are some of the things we're seeing, and how we can work with them to really use some of these innovative topics and innovative areas to drive growth, drive change, drive new business models, new revenue streams, and help transform a lot of our clients.
It seems like one of those topics of focus has been DeFi as well, more recently.
Absolutely.
I'm curious how does EY and EY Parthenon view DeFi more broadly?
Excellent question. So at EY broadly, we have a very big Web3 digital assets, crypto blockchain practice. So maybe I'll start actually outside of the practice I'm in. So we have a big audit practice where we audit a lot of firms in the space and we provide financial advisory work, and assurance work. We've got a tax practice that does a lot of tax work for a lot of the digital native companies, the crypto native companies, et cetera, as well as working with traditional financial firms that are engaging with these assets. We've got a big consulting practice that focuses both on the risk and operational side of things, as well as a blockchain technology team that actually works with a lot of these platforms, hands-on keyboard, develops smart contracts, develops technology, works with clients to implement these solutions. And practice that I'm in is our strategy transactions practice, and we help firms think through what is this disruptive technology going to do to their business, how should they respond, what type of product should they bring to market, how might they price it? How might they partner with some of the digital natives and startup firms like Centrifuge and like yourself, to get to market, as well as also support on the transaction side. We saw a lot of private capital and private equity pouring in, so we've supported both on commercial due diligence, transaction diligence, with a lot of the deal activity, as well as even some of the integrations where we've seen some M&A activity. We've supported on the integration side as well. So I would say EY broadly, we've got a big practice across all the service lines covering digital assets. decentralized finance, blockchain, tokenization, et cetera. And we're very excited and working with our clients both in the traditional financial space as well as the DeFi/digital native space on all things growth, operations, risk, audit, tax, et cetera.
One of the ways that I think is super valuable how you sort of distribute this information is through your reports. And then back in August of this year, you authored a report actually on tokenization and asset management. So I'd love to hear a little bit more of what led you to write this report and what some of your most interesting findings were.
Absolutely. So to your point, a way we do bring things out to market is, we author reports, white papers, do webcasts. I myself have done a few surveys in the space. Actually in February, we did a survey on institutional investor demand in digital assets broadly, including cryptocurrencies, funds that invest in the space, PE, VC style investments, and tokenization. Why we started to, or why I decided to do this survey and report on specifically in tokenization was we started to get a lot of inbound requests and conversations with first with banks, then very heavily with asset managers. They were seeing organizations piloting, launching funds in the space, and everyone wanted to see what is this, what could be done, what is this technology, and a big part of the question was, is there actually demand? Are investors, whether they're institutional investors or high net worth investors, actually interested in investing in tokenized assets? What are the drivers? What are the assets? What are the, how would they like these assets distributed? And so we wanted to help answer some of those questions and do some research to, bring some ideas out to the market. And so that's why we decided to do this report with a multitude of surveys to really bring that thought leadership out in the market.
So when we're thinking about that demand side and these different investor segments, who specifically did you aim to survey and how did you sort of categorize them?
Absolutely. So we wanted to test both, who we wanted to survey. We wanted to survey and get a broad understanding across the whole, or at least a big part of the market. So we actually did two surveys. First survey was on institutional investors, and we focused on asset owners and asset allocators. So think your family offices, pensions, endowments, foundations, et cetera. And we wanted to survey asset owners that knew a bit about blockchain technology, but also had some allocations to alternatives, as we wanted to cover all asset classes. And we also wanted to make sure who we were surveying was actually someone who's either responsible for asset allocation or was knowledgeable about the process. On the second side that we wanted to test was we wanted to really test the individual demand for tokenization. And so we focused on high net worth investors. So we surveyed around 250 plus high net worth investors, all US based. And the way we defined that were investors that had at least $1 million in investable assets, excluding the primary residence, apologies. And we had a mix of investors that had allocations to alternatives versus those who did not.
Okay, so pretty, wide range of different types of investor segments. I think diving into some of what you found in this report, one thing that we pulled out that I think is pretty incredible, at least from our perspective, is that you found the allocation towards tokenized fixed income portfolio is expected to increase by 600% between 2023 and 2027. And then you also found that institutional and high net worth investors are planning to allocate between 5.5% and 8.5% of their entire portfolios to tokenized assets by 2026. So those are just a couple of pieces of data that really jumped out that shows just a really large interest in coming into this space in a meaningful way. And I'd love to hear from your perspective, what do you think is driving this interest for these investors?
Absolutely, and definitely the numbers do seem really exciting. They do seem really big. To your point on the 600% increase, why do we think investors are seeing that big jump, or why are investors interested? I know the number sounds very large, but I guess it was starting at a 1% to roughly 6%, but definitely quite impressive. What we see is driving the interest in increasing those allocations to tokenization is actually more around the perceived benefits of tokenization. So for investors, if you're looking at equities, fixed income, funds, et cetera, it's the same assets, same asset classes. So it's less around investing in something net new. It's more so of a snowball effect. As investors start to see some of the perceived benefits that we in the industry talk a lot about, such as increased liquidity, fractionalization, potential for lower transaction costs or fund fees, potential for quicker settlement, access to new investor types. If people are getting those types of benefits. In their mind, right, if they're allocating 20% to fixed income, if they're able to settle some of their trades quicker and through accessing it through a certain way, which would be tokenization, and we're seeing a bit of a, I'll transition my fixed income portfolio to being basically 100% traditional and zero digital / tokenized, to maybe start getting more into tokenized assets as more issuers start to invest and as the technology and ecosystem starts to build itself out. So I think what's driving investor interest is right now for some of these asset classes like alternatives, there's lower liquidity. So if the promise of driving liquidity in general, not necessarily making illiquid assets liquid, but enabling a level of liquidity to these illiquid assets is attractive, lower transaction costs, being able to access some of these products. High net worth investors these days, unless they have large amounts of capital, can't access some of these products. If you're a fixed income trader and you want to, you're trading debt around the world, or you're trading debt within a certain market, you have to keep cash on balance to settle your book until it settles 1 or 2 days later. If you don't have to keep that cash on balance and you can turn your book over quite quicker, that becomes quite interesting. And so there's a lot of benefits which, once those benefits come realized, can quickly, drive individual investors as well as institutional investors to allocate more to these assets.
That's really interesting. I think particularly this aspect of how those advantages then change potentially investment preferences for different types of asset classes, as you actually start realizing things like more liquidity for a specific type of asset class. I'm curious, based on the survey results, are you seeing some sort of changing landscape around these investment preferences?
I think what we're seeing is, right, so one of the questions we surveyed specifically on the high net worth investor, there's a whole story around high net worth investors wanting access to alternatives. And on the flip side, there's this whole story around asset managers wanting to get alternatives in the hand of individual investors, right? Institutional capital, it's growing in their allocations to alternatives, but it's not as big of a growth rate given that there's already large allocations there. But individual investors, perceive the benefits, or they see the benefits of alternatives. They see the high returns. There's the perception, if I've got lots of millions of dollars I can allocate to these products and get even, grow even more wealth. And so we do see if these products become more available, perhaps the traditional 60-40 equity fixed income might be a bit, or 60-35-5 alternatives might start to grow and shift a little bit as some of these products become more available, and as investors become more educated about them, as wealth managers are able to work with asset managers to distribute them, as asset managers are able to manufacture them and get them in the hands of individual investors. There's certainly a shift of interest, certainly towards alternatives. I think we found a stat in the survey, over 60, I think it was 65% of high net worth investors either want access to alternatives or want better access to alternatives. And I think the remaining 35% either had, noted that they had adequate access, and when we drilled into their amount of net worth, they were more around the 25 million plus, or there was a small percentage that wasn't quite interested. But really, a big majority either want better access to alternatives or just want access to alternatives in general.
Do you think that DeFi as it is today is meaningfully providing that sort of alternative to these investors of, having better access to these products? I think Centrifuge is maybe taking a first step in that direction, but probably we have a ways to go before we're really, meeting that demand expectation from these investors.
Definitely, I think within DeFi and for example, what you guys are doing at Centrifuge with private capital is definitely quite interesting and creating optionality. What I don't think is quite there yet is the level of scale and comfort. And what I mean by that is, for the average investor today, most of them might have a few brokerage accounts, an IRA, a 401k. Maybe some of the really savvy investors might be exploring DeFi and some of the new startups and fintechs. But I think there's a level of comfort, and for the average investor, if I've got a relationship with broker XYZ, or I have a private bank account with firm ABC, how do I get everything together, or how do I get access that way? So I think there certainly are certain avenues that have come up in the past few years, whether it's looking at fractionalization and tokenization of alternatives, for example, what you guys are doing at Centrifuge and a few other firms as well. I don't think it's quite hit the scale yet. And I think in order to drive that, it's how firms like yourselves might partner with some of the bigger firms and to facilitate manufacturing and distribution of some of these assets. Because I think a big part of the angle that needs to be thought about is the customer experience. And if you're an individual investor, many individual investors may not feel comfortable or may not even know where to look, or may not want to onboard to yet another, do AML KYC on and open up yet another account. But if they're able to get access to these products through traditional measures, that might drive a bit more comfort and a bit more adoption for them.
Yeah, that definitely makes sense. I think we do have quite a ways to go in terms of scale, especially as you mentioned, like in this report, expecting the 600% increase. I mean, that's really only because we have such a small percentage of these institutional investors in DeFi so far. But I'm really personally excited to see that scale. I think one
Definitely.
thing, taking maybe a step back and thinking about a higher level perspective and just how traditional markets work. I'm curious to hear what you think the impact of this sort of adoption of tokenization will have on how these markets work, actually.
So I think, and that's a very good question. What will the impact of tokenization be on traditional markets and how we perceive that? So I think there's still going to be a role for traditional markets. I think traditional roles will likely evolve. There's going to be perhaps some disintermediation and some new roles will be required. But I still think still think the traditional market will play a big role. But it will require firms like asset servicers and banks and fund admins to really evolve and support these capabilities and think through what the role is going to be in this new tokenized or blockchain ecosystem. So there's still going to be a need for intermediaries, we believe, to support things like settlement and custody of these assets, supporting, accounting for these new assets, right? If you're a fund accountant or a fund admin and you've got equities and bonds and tokenized assets, how do you account for performance and tax and everything like that? Also, there's going to be, all these net new use cases. Once assets are tokenized, you can then enable things like lending and collateral management, and there's going to be a role that firms are going to need to be playing to support things like that. And also, if you think about if a lot of these assets are smart contracts, issuer servicers and asset servicers are going to have to support smart contract management and cybersecurity around these smart contracts. And so, I definitely think this will definitely have a big impact on traditional markets. It's not going to completely disintermediate. It's just going to involve. It's going to require organizations and some of these roles to evolve and adapt a bit.
Do you think there will be any fundamental sort of change to how our financial system markets work?
I think a lot of the stuff that can happen with blockchain around automation will enable a lot of processes that are done by various different parties and even manual and individuals and different operating groups or operational groups. It'll drive a lot of automation around that. So if you think about onboarding, dividend payments, capital calls, coupon payments, and things like that, which are quite manual today, especially for alternatives and even fixed income, I think it'll result in a lot of those types of roles and firms evolving and adapting and how they service. And so I think there's going to be some roles that we see today which may no longer exist or may not be needed, especially when you're talking tokenized assets, and if tokenized assets become, the net new way of interacting. But I still think it'll create net new needs for some of these assets to be serviced. And I think, especially on the institutional investor side, there's going to still be a need for some of these third parties to provide these services, provide these capabilities, provide that other level of trust on top of the decentralization to make investors really comfortable.
Yeah, that definitely makes sense. I think, yeah, as we automate things, it doesn't necessarily remove the need for all types of service providers, and we're still going to need a lot of different firms like EY coming in and providing those services. I'm curious. So we've seen probably at least a couple of cycles of attention around this
Yeah.
tokenization. From your perspective, what do you think is different about this cycle compared to the last one?
That's a very good question. What do I think is different about this cycle of blockchain and tokenization versus the past couple over the past 6, 7 years? So I think right now what's happened now is there's been a focus on use cases that have the ability to drive real value for both, for all parts of the ecosystem, whether it's the investors, whether it's the financial service institutions, it's other parties as well. And there was a lot of different use cases that were focused on over the past 5, 6 years when it comes to blockchain. Some of it seemed interesting at the time, but I think a lot of it's fizzled out as people have started to really cut through some of the noise and think through what's got the ability to drive real value. A second big thing is we've seen a lot of big financial service institutions have actual budget allocated to some of this innovative spend to focus on tokenization. I don't think a week goes by where we don't see some big bank, asset manager, regulatory body, card network announce some sort of pilot or product launch or release some sort of white paper. They're actually spending time and money. And I think another big thing too is with this go around with blockchain, we're not creating perhaps net new asset classes. Um, it's the same assets if you think about it, right? Whether it's real estate, it's private capital, it's equities. It's just figuring out a way to automate and digitize and really figure out and transform different ways of bringing those to market. And I think there's also been some better education around the differences between different use cases within blockchain. So people have started to understand the difference between cryptocurrencies, between tokenized assets, between other things. And not to say cryptocurrencies don't have a role in play, and there's that's a whole separate conversation. But I think there's been a lot of perceived value and interest around tokenization of assets and some of the benefits that can be brought around it. I think lastly, there's been some friendly regulatory regimes in select areas around the world. You've seen Project Guardian under the MAS and a few other things happening in the UK and other areas, and we've also seen some funds approved here in the US as well. So we've seen a little bit more of a friendly regulatory approach and at least more open on the regulatory approach to really think through and think through how this technology could interact in the financial service system today.
So I think, yeah, it sounds like we've made a lot of progress probably since the last cycle. A lot more attention, a lot more research, resources going into tokenization. I'm curious within that, like, what do you think the biggest challenges are within all of the attention that tokenization is receiving to actually then achieve mainstream adoption, and maybe even in particular to achieve adoption within a company like yours at EY?
It's a great question, and it's one we get a lot. If everyone talks about the great benefits of tokenization, what it can unlock, if it's so great, why aren't we realizing it right now, right? What are the benefits and challenges to really realizing that value and driving some of that change? I think there's a few fold. I think it's still quite a nascent ecosystem and supporting infrastructure. I don't think the big rails have really fully adapted and built out the technology yet. I think right now we've seen some interesting moves with a lot of firms like yourself with Centrifuge and others pop up throughout the ecosystem to support tokenization, support alternative trading systems, support issuing these tokens, managing these tokens. We're seeing some large asset managers and firms partner with them together. We even saw recently some M&A activity happen in the space. So I think the ecosystem is still evolving and is still growing. I think there is still, to a degree, some education that needs to happen about the difference between tokenization and tokenized assets versus cryptocurrencies, and how that's treated both within organizations as well as within the regulatory bodies as well. I think the evolving regulatory environment and some of the announcements at some of the regulatory bodies, I think that's slowly helping things move forward. But I think as that'll progress, that'll help realize and enable some of that value creation, value realization. I think also, frankly, a big piece to it all is the distribution network and mechanics. It's one thing to be able to tokenize these assets, and I think that technology is a lot of firms have solved for that. But how do you actually get it into the hand of investors? Is it through traditional intermediaries? Is it through fintechs? Is it through decentralized platforms? Is it through all the above? Is it through governments? How do you actually get these assets that are tokenized in the hands of investors? That's a seamless experience for the end investor. I think that's a big piece to it. I think lastly, right, there's an upfront switching cost and investment required. Firms, if a trader is trading traditional bonds and tokenized bonds, they have to operate on both the rails and maintain books and records on multiple platforms. If an asset manager is issuing funds through traditional measures as well as tokenized funds, they have to operate multiple rails as well, multiple shadow ledgers or multiple ledgers, and so there's an upfront switching cost, which for many organizations, when times are tough, can be quite hard to swallow.
Yeah, it definitely makes sense. So it sounds like it's just a matter of time before we really get there, before, the industry has really evolved, scaled, and gotten to a point where institutions are ready to make that jump over.
I think it's gonna be a snowball effect as more product gets tokenized, as the distribution or distributors such as the intermediaries, the broker dealers, the wealth managers, the fintechs start setting up capabilities to enable the end investors to get access, as the regulatory bodies start, working with the working and putting out frameworks. Um, as some more organizations get on board, I think it'll be a snowball effect, where we'll see that change happen quite quickly over the next couple of years.
Nice. I mean, we're certainly excited to see that change happen. I guess I'm curious, I mean, within that evolution, what role do you think traditional players like EY will have versus DeFi native players like Centrifuge in bringing this tokenization to the market?
It's a great question. What role do I think traditional players will have, like UI and DeFi players like Centrifuge, and also the traditional financial service firms? So I think I'll start with the traditional financial service firms. So I think there's going to be a role that they'll still play with custodying the assets, issuing the assets. Asset managers of today will still continue to launch funds, and wealth managers will still continue to distribute assets. And so I think there'll still be a big role for financial service firms. They will be driving quite a pivotal role. I think DeFi platforms like Centrifuge and others will be working together with a lot of these firms to bring these products out, help firms innovate, try different use cases, help enable adoption. I think firms like EY will help as you're shifting the trust model away from centralized parties to decentralized network. I think a role where EY will play is supporting and maintaining that trust in that new ecosystem, new paradigm, whether it's helping with audit, risk management, financial advisory, also supporting the transition from traditional rails to decentralization and blockchain and tokenization, working with organizations to think through strategy and how they set up their operating model, how they think through new risks, how they work with a new risk profile, how they mitigate new risks, how they set up controls to mitigate risks, how they work with technology, how they provide audit services, et cetera. So I think there's an exciting role for firms like EY, for firms like Centrifuge, as well as for the traditional financial service ecosystem players.
All right. Well, I think I've wrapped up on, those big questions that I had for you today, but we always love to end our
Yeah.
podcast with the spiciest question and ask you if you have one or two hot takes for us, whether it's on DeFi or tokenization or,
Yeah.
some of your research findings more broadly. Would love to hear.
Definitely. So what I like to say is the role of the asset manager as we know it today could drastically change or could be dead, in the sense that there could be a world where the asset manager of the future is essentially a smart contract operator. So they're just updating code which manages different tokens, underlying tokens, and underlying assets that are tokenized to execute much strategies. And to throw another exciting technology that we're also quite excited about, generative AI. Imagine generative AI driving change, using external data, market feeds, algorithms, driving change into the smart contract code to drive changes into the trading strategies. It's super out there, but I could see it being quite exciting. We're an asset manager with portfolio managers and strategists and quant desks and researchers could be really transformed with two technologies, with blockchain and generative AI.
That
I think
sounds
a
really
second one,
cool.
yeah, it sounds kind of exciting, and it's fun to say when you're meeting with an asset manager, say within 5-10 years the role of an asset manager is dead, right? But that causes a little bit of a pause, but it's not the full story. It's just a nice statement, and I think it can be quite exciting how asset managers can utilize these technologies to really revamp the way that they operate as fund manufacturers, as fund distributors.
Yeah. So
And
not
second
dead,
is,
but
oh, go ahead.
evolving.
Exactly evolving. I think the dead part is to raise the eyebrows, and then you pivot with a, but not dead, evolving. Exactly. And I think the second one is, I think it's only a matter of time where everything that could be tokenized gets tokenized, whether it's financial securities, whether it's some real world assets like real estate, like gold, whether it's cash flows, whether it's things like concert tickets or art or memorabilia. And I think that can be quite exciting, where you could create net new use cases, net new markets out of assets, the way traditionally don't exist today.
Awesome. That's cool to hear. And I think hopefully some of those assets we get to see coming onto Centrifuge as well.
Absolutely.
Well, it was really great to have you today, Prashant. Really appreciated diving into that report. We'll probably provide a link to that in the podcast as well, so you can have a read. And hopefully you join us again.
Definitely, and thank you for having me, Cassidy. Great talking and sharing through what we're seeing in the market around tokenization, particularly opportunity for asset managers and blockchain overall. And have a good day.